Good day, learners. This is your accounting teacher, Sir AJ, and welcome back to my channel. For today, we will be discussing another topic in financial accounting, and we will be talking about the new conceptual framework. So if you want to learn for today the new conceptual framework, this video is for you. So for today, we will be discussing the new conceptual framework. This is the conceptual framework that was revised. So we will start our discussion with an introduction to the new conceptual framework. The International Accounting Standards Board, or IASB, issued the revised conceptual framework for financial reporting in March 2018. The conceptual framework, guys, is a comprehensive set of concepts for financial reporting. So if you want to know the concepts that you need to learn in preparing financial reports, then you need to go to the conceptual framework. The purpose of the conceptual framework are the following. Number one, it aims to assist the board or the IASB to develop standards based on consistent concepts resulting in financial information that is useful to investors, lenders, and other creditors. Number two, it aims to assist preparers of financial reports to develop consistent accounting policies for transactions or other events when no standard applies. So kapag walang standard na nag-a-apply for a certain transaction, preparers of financial reports can use the conceptual framework. Or when a standard allows a choice of accounting policies, again, the preparers can use the conceptual framework. And number three, it aims to assist all parties to understand and interpret the standards. What is the status of the conceptual framework? Take note that it only provides concepts and guidance that support the decisions the board makes when developing standards. Therefore, it is not a standard in itself. Hindi siya standard. It only supports the standard, but it is not standard, and it does not override any standard or any requirement in a standard. So for example, if there are conflicts between a standard and the conceptual framework, what will prevail is the standard. And finally, the effective date of this new conceptual framework is immediately for the board and the IFRS Interpretations Committee. But for preparers who develop an accounting policy based on conceptual framework, it will be applied on annual periods beginning on or after January 1, 2020. So that means for this year, this is already effective. There are 8 chapters in the new conceptual framework, so we will discuss each chapter. The first chapter is about the objective of financial reporting. So what is the objective of financial reporting? The objective is to provide financial information that is useful to users in making decisions relating to providing resources to the entity. So, financial reporting helps users make decisions. And in terms of the users, they assess the following with regards to the entity who provide financial information. Number one, it assesses prospects for future net cash inflows to the entity. So, tinatry nilang i-check if there are future cash inflows to the entity. Kasi pag mag-provide sila ng resources to the entity, of course, they are expecting that they will be compensated in the future. And number two, they also assess management stewardship of the entity's economic resources. Who are the primary users then? These are the existing and potential investors. So, they are making decision about investing in the entity. So, kaya nga, they are assessing the future cash inflow and the stewardship of management kasi gusto nila magkaroon sila ng return on investment. And number two, primary users din yung mga lenders and other creditors. Because if lenders or other creditors lend money to the entity, then they need to have an expectation na mababalik yung pinautang nila or pinahiram nila sa entity. So ito ang ating mga primary users. And what information do they need? They need information about the entity's economic resources, claims against the entity, and changes in those resources and claims. And number 2, they also need information on how efficient and effective management discharge their responsibilities to use the entity's economic resources. So take note that the objective is to provide financial information that is useful to users in making decisions about providing resources to the entity. Don't forget that. Chapter 2 is about the qualitative characteristics that make financial information useful. So there are two types of qualitative characteristics. First type are those fundamental characteristics. Fundamental characteristics are those that are required because they make information useful. There are two characteristics under this type. Number 1 is relevance. So when can we say that information is relevant? Information is relevant if it is capable of making a difference to the decisions made by users. So paano mo masasabi if they are capable of making a difference? They are capable of making a difference if they have either predictive value, meaning they can predict the future, or confirmatory value, or they can confirm past information. So that's the first fundamental characteristic, that's relevance. Number 2 is faithful representation. It means they must faithfully represent the substance of what it purports to represent. Meaning, when you represent something, dapat faithful mo siyang ginawa. Hindi ka nagsinungaling, hindi ka nag-withhold ng information. Therefore, the ingredients of being faithful are complete, dapat kompleto yung information, neutral, that is hindi ka bias, and number 3, it's free from error, hindi siya mali-mali. So take note that for an information to be faithfully represented, it must have completeness, neutrality, and freedom from error. So again, these fundamental requirements or fundamental characteristics are required. Number 2 are those enhancing characteristics. Yung mga enhancing characteristics, they only enhance the usefulness of information. Therefore, they are not required. But we want to maximize them as much as possible. Ang ating mnemonics for the 4 enhancing characteristics ay VCAT. So first, verifiability. Next, number 2, comparability. Number 3, understandability. And number 4, timeliness. So again, VCAT. They are not required but they are maximized. Now let's talk about the cost constraint. Yung benefit ng providing of the information needs to justify the cost of providing and using the information. So the benefits should outweigh the cost. Hindi pwedeng the other way around. So that's the cost constraint in this characteristic. Chapter 3 is about financial statements and the reporting entity. So we'll first talk about the reporting entity. A reporting entity is an entity that is required or chooses to prepare financial statements. So once you are required or pinili mong gumawa ng financial statements, you are considered to be a reporting entity. A reporting entity is not necessarily a legal entity because a reporting entity can be a portion of an entity or it can comprise more than one entity. In the financial statements is a particular form of financial reports that provide information about the reporting entity's assets, liabilities, equity, income, and expenses. So when it comes to financial statements, these are the financial statements that reporting entities prepare. First, the statement of financial position. Diyan natin nilalagay yung mga recognized assets, liabilities, and equity. Next, we have the statement of financial performance. Dito naman natin nilalagay ang income and expenses. And finally, we have other statements and notes. Pwede nating ilagay dyan yung additional information on recognized assets and liabilities, information on unrecognized assets and liabilities, information on cash flows, information on contributions from or distribution to owners, and other relevant information. So, ito yung mga financial statements. Now, depending on the reporting entity, mag-iiba din yung klase ng financial statement. We have what we call the consolidated financial statement. The consolidated financial statement provide information about assets, liabilities, equity, income, and expenses of both the parent and its subsidiaries as a single reporting entity. So, ano yung parent at ano yung subsidiary? When one entity purchases another entity, so siya yung nagiging parent, yung acquirer, at yung inacquire niya is yung subsidiary. For example, yung Jollibee, pinurchase niya yung Mang Inasal, then Jollibee is the parent and Mang Inasal is the subsidiary. When they prepare financial statement as a single reporting entity, then that financial statement is called consolidated financial statement. If the information about assets, liabilities, equity, income, and expenses is of the parent lang, hindi sinali yung sa subsidiary, we call that the unconsolidated financial statement, or in other terms, yung separate financial statement. And number 3, we have the combined financial statement. This provide information about assets, liabilities, equity, income, and expenses of two or more entities that are not at all linked by a parent-subsidiary relationship. So, pag two or more entities ang nag-combine ng kanilang financial statements pero hindi naman sila parent at subsidiary, then ang tawag doon ay combined financial statement. Then we have Chapter 4, the elements of financial statements. There are 5 elements in the financial statement. The first element is the asset. So what is an asset? In the old conceptual framework, the definition is this is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. But take note, there is a new definition for asset. The asset is a present economic resource controlled by the entity as a result of past event. Therefore, this new definition na-highlight na yung asset is an economic resource at tinanggal na yung future economic benefit na expectation. But take note that the economic resource is a right that has the potential to produce economic benefits. So, nandun pa rin naman pero na-highlight lang na yung asset is an economic resource. The second element is the liability. The old definition is, it is a present obligation of the entity arising from past events, the settlement of which is expected to result in an outflow from the entity of resources embodying economic benefits. The new definition in the new conceptual framework is something like this. It is a present obligation of the entity to transfer an economic resource as a result of past events. So, hinighlight ulit that liability is an obligation to transfer a resource. So, ano ba ang definition ng isang obligation? An obligation is a duty or responsibility that the entity has no practical ability to avoid. So, take note of the new phrase, no practical ability to avoid. If you cannot avoid that duty or responsibility, then that is an obligation and it is part or it meets the definition of a liability. The third element is equity. Equity is just the residual interest in the assets of the entity after deducting all its liabilities. Number 4 element is income. So, kailan nagkaka-income? Income are increases in assets or decreases in liabilities that result in increases in equity other than those relating to contributions from holders of equity claims. while expenses are decreases in assets or increases in liabilities that result in decreases in equity other than those relating to distributions to holders of equity claims. So take note, yung income are increases in equity except dung mga kinontribute ng mga owners, at yung expenses are decreases in equity other than yung mga dinistribute natin sa mga owners. Chapter 5 is about recognition and the recognition. First, recognition is the process of capturing for inclusion in the statement of financial position or the statement of financial performance an item that meets the definition of an asset, a liability, equity, income, or expenses. So recognition is about, do we include this item in the statements? Kailan natin i-recognize ang isang item? We will recognize an item if it results in both relevant information and a faithful representation of those items. So we consider again kung relevant ba yung item na yon at it can be faithfully represented. If yes, then we can recognize that item. Relevance, in terms of recognition, may be affected by the following. Number 1, low probability of a flow of economic benefits. So baka, if sobrang baba ng probability na may economic benefits, then baka hindi natin siya i-recognize kasi hindi naman siya relevant sa mga users. Number 2, existence uncertainty. If we are not sure if this item really exists, then baka hindi na lang natin siya i-recognize because it may not be relevant to users. While faithful representation may be affected by the following. Number 1, measurement uncertainty. Baka hindi natin ma-measure ng maayos yung isang item. So, hindi na lang natin siya i-recognize kasi we cannot faithfully represent them. Number 2, recognition inconsistency or accounting mismatch. And number 3, presentation and disclosure. Baka we cannot present them ng maayos or we cannot disclose them ng maayos, then we cannot faithfully represent them. So baka hindi na lang natin sila i-recognize. On the other hand, the recognition is the removal of all or part of a recognized asset or liability from an entity's statement of financial position. So if recognition is the inclusion, yung removal naman is what we call the recognition. Normally, the recognition occurs when, number 1, for an asset, when the entity loses control of that asset. So when we lose control of the asset, we de-recognize it. Normally, we lose control kapag binebenta na natin or hindi na natin ginagamit. And for a liability, when the entity no longer has a present obligation, then we de-recognize that liability. So that's it for recognition and the recognition. Chapter 6 is about measurement. There are 2 measurement bases that we need to follow according to the conceptual framework. The first is historical cost. Historical cost provides information derived from the price of the transaction or other event that gave rise to the item being measured. Ibig sabihin, historical cost is the price nung time na binili mo siya or kung kailan nagkaroon ng item na ganun. Binili, dinonate, or whatever. So, yun yung historical cost. Historical cost is reduced if they become impaired. And one way to apply a historical cost measurement basis to financial assets and financial liabilities is to measure them at amortized cost. So, application daw yun ng historical cost. We will talk about financial assets and liabilities in the future in another video. Pero that's historical cost. The second measurement basis is current value. Current value provides information updated to reflect conditions as of today or at the measurement date. Kaya nga siya tinawag na current value. Under this measurement, we have the following. Number 1, the fair value. This is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. So anong conditions ang kinoconsider natin when we use fair value? We consider the expectations of the market participants or yung mga nasa market. Number 2 is yung value in use. It reflects entity-specific current expectations about the amount, timing, and uncertainty of future cash flows. So kapag yung fair value, we consider the market participants. Dito naman sa value in use, we consider the expectation of the entity itself about kung ano yung magagamit na or ano yung amount na makukuha niya from continuously using the asset. And number 3, the current cost. It reflects the current amount that would be paid to acquire an equivalent asset. So yung historical cost is the amount that you paid in the past when you acquired an asset. Yung current cost naman is the amount that would be paid kapag binili mo ang same asset pero binili mo today. That's why it's called current cost. So again, meron tayong historical cost, meron tayong current value. For Chapter 7, we have presentation and disclosure. Presentation and disclosure is aimed for better communication. Information about assets, liabilities, equity, income, and expenses is communicated through presentation and disclosure in the financial statement. Presentation pertain to kung paano natin siya pinapresent sa face ng financial statements, while disclosure pertain to the information that we put or that we disclose in the notes to the financial statements. Effective communication of information in financial statements makes that information more relevant and contributes to a faithful representation of an entity's assets, liabilities, equity, income, and expenses. And finally, the last chapter is concepts of capital and capital maintenance. There are two concepts of capital. The first concept is the financial concept of capital. In this concept, capital is regarded as the invested money or invested purchasing power. It is synonymous with equity, net assets, or net worth. The second concept is the physical concept of capital. In this concept, capital is regarded as the entity's productive capacity. Example, units of output per day. So, what do we choose as capital concept? It is based on your users' needs. If your users are primarily concerned with the maintenance of nominal invested capital or purchasing power of invested capital, the financial concept should be used. But if your user's concern is your operating capability, then the physical capital concept should be used. Most entities nowadays adopt the financial concept. So how do we determine profit? Depende sa concept of capital. If we use the financial concept, then we have the financial capital maintenance. There is profit if the net assets at the end of the period exceeds the net assets at the beginning of the period, after excluding any distributions to and contributions from owners during the period. Under this capital maintenance, it does not require any particular measurement basis. So you can use historical cost or current value. You can use any measurement basis. Under the physical capital maintenance, profit is earned only if the entity's productive capacity at the end of the period exceeds the productive capacity at the beginning of the period, after excluding again any distributions to and contributions from owners during the period. In this concept, it requires the use of current cost as measurement basis. Since we use the productive capacity, kailangan natin gamitin ang current cost. So that would be all for the new conceptual framework. Now it's your time to test your knowledge. If you know the answers to these questions, type in your answer sa comment section ng video na to. Question number 1. According to the conceptual framework, these are the qualitative characteristics that make information useful to users. Letter A, fundamental. Letter B, enhancing. Letter C, relevance. Or letter D, comparability. And question number 2, which of the following does not meet the definition of an asset? Letter A, equipment that the entity intends and is very certain to acquire in the future. B, inventories purchased and received but not yet paid. C, land received from a donation. Or D, a publishing title for a college textbook. The publishing title has no physical substance, meaning you cannot see it or touch it. Again, if you know the answers to the two questions, comment your answer sa video na to. So, thank you very much guys for listening and watching this video. I hope that you learned something today. If you have questions, you may reach me sa Facebook, sa Twitter, or sa YouTube channel na to. So, thank you very much sa lahat ng nag-subscribe na. Thank you very much. We already have 1,800 subscribers. If hindi ka pa nakaka-subscribe, baka nakalimutan mo, please do subscribe to my channel. Hit that notification bell para ma-notify ka if may bagong video ako. So thank you very much. Like, comment, share this video para maabutan natin or ma-reach natin yung mga ibang estudyante that are in the process or in their journey of reaching their dreams of becoming a CPA. So thank you very much guys. I hope you learned something today. That would be all. Bye!